Welcome everybody, welcome to the Warren Buffett talk. My name's Russell Markham. Let's just move my camera back over so you can effectively see me. So we are. I should be showing up on your screen now. And this is the other slide set that I then move back over to. So let's just put it back over to myself. My name's Russell Markham. I'm the Director of Education for VectorVest Asia Pacific. It's my pleasure to bring you Warren Buffett stocks, the talk on Warren Buffett stocks today. What a great topic. You're going to see some very interesting results. Okay, with that said, let's move over to here. And there we are. I've got a picture of the great man, Warren, there. And effectively, you can see just that link there. You can get that picture there on Wikipedia. All right, before we get going today, I just need to point out here, there are our given licenses, and you can refer to us there per our financial services guide that spells it all out there for you. All right, so any advice is general advice today. I need to point out that we cannot take into account any of your personal objectives or financial situations or needs. All right, so if you consider any of the information given to you today, please speak to your financial professional. Past performance is not a guarantee of future results. Forecasts and backtests used or discussed in this presentation are intended as a guide only, and they can be impacted by known or unknown risks or uncertainties. All right, so what does Warren Buffett look for? All right, he's looking at key metrics like return on equity. All right, so the equity invested in, what is the return being derived? He looks at things like management. Is it a unique company? Does it have a competitive advantage? You may have seen him over the years, you know, when he's drinking a can of Coca-Cola there at the given press conferences there. He's a heavy investor into Coca-Cola. He'll note to you it's a unique product. Nobody else has quite been able to master what Coca-Cola has done, for example. So important to have good management, unique offerings, a competitive advantage. You know, if you're going to go and buy into a company, let's say if we take the example back to Australia, I'll just move the camera back over to me for a second here. But let's say you're going to go and buy into a given company in Australia, and let's say that's a gold company. You know, why not buy the gold company that has the best advantage out there? It's got the lowest operating costs per ton. It's got the best management, and it's been performing the best overall, and it's got, you know, the best location in Australia, whatever it might be. Why not go after that competitive advantage? Okay, so that's effectively what Warren's doing there. Price is important. He doesn't want to rush in and just simply buy something that's heavily overvalued. So he's looking at value investing as such. He wants to make sure that he's buying good long-term value. He's looking at things like levels of debt. Doesn't want to buy into companies with huge amounts of debt on their balance sheets, and profit margins. Really important. Those companies need strong profit margins, because strong profit margins will ultimately be what drives the share price higher. And again, you can Google this up, Investopedia. You can go and Google up what Warren Buffett looks for. This is just a small snapshot, and just to make sure I don't run over time for the presentation. We could go on a lot more on this, but those are some of the key things. All right, so I'll just read out here from Investopedia. Warren Buffett's strategy for picking winning stocks starts with evaluating a company based on its value investing philosophy. Buffett looks for companies that provide a good return on equity over many years, particularly when compared to rival companies in the same industry. So that's important, not just currently, but over the years. When looking for a great company to invest in, Buffett also reviews a company's profit margins to ensure they are healthy and growing. That's key. We'll find that today. Buffett focuses on companies that provide a unique product or service that gives them a competitive advantage. He also focuses on companies that are undervalued that he can purchase at a good discount. All right, so with that said, let's have a look at the two shares there in the US that Warren Buffett runs there. So Warren Buffett runs Berkshire Hathaway, so you've most likely all heard of that, which has a market capitalization of over 570 billion US dollars, right? So eye-wateringly huge numbers there. All right, you can look up Berkshire Hathaway in the US market by graphing these two ticker codes. So the ticker code, first one here is BRKA/M and BRKB. Right, the latter, BRKB, took place in 1996 when Warren Buffett responded by issuing Class B shares and then doing a 50-to-1 stock split in 2010. All right, so 50-to-1. The reason he did that is he made it a lot cheaper for the average person to buy in, because at one stage Berkshire Hathaway shares became, well, almost impossible for the average person on the street to consider wanting to buy in because they were just so expensive. All right, so he's given you the opportunity, you the investor, the opportunity to buy in a share of his fund there at a cheaper price. Okay, so here's BRKA/M. You can see now it's well over $450 a share. Back in 2002, it was below $100. You can see just the amazing performance of Mr. Buffett. And here we are. Here's Berkshire Hathaway, BRKB. So this is now gone. It was around about $50 odd back in 2627, and you can see it's moved right up now to over $300 US dollars per share. All right, so this got us thinking at VectorVest, and we said, well, hang on, let's have a look, because these returns are phenomenal. Why don't we get some insight into what's currently being held? And fortunately, Mr. Buffett is pretty generous with what he offers online there. You can find out a lot of things. But also in the US, by law, you have to file certain forms that disclose what you're holding at a certain point in time. It certainly doesn't necessarily give you all the secrets as such, but you can certainly go and find out at a snapshot point in time. So the two websites I'll refer to here, there's one, buffett.online/en/portfolio. So that's one that gives us a pretty good snapshot. And then there's another one here, cnbc.com/Berkshire Hathaway, Berkshire-Hathaway-portfolio. So this has been recorded on YouTube, so you can go back and watch this and pause it just to jot down those addresses. So with that said, let me do this. Let me fire up. All right, so here we are, and I'll bring this across, and you should all be able to see this. So there's Buffett online/en/portfolio. And you can see over here the snapshot as reported to the SEC on the 14th of February 2022. But this is Berkshire Hathaway as of 31 December 2021, for example. Right, you can see it at the end of 2021, and you can see all the different holdings. So you can scan your eye down here, and you can see all the different holdings. So you can see Apple, Bank of America, American Express, Coca-Cola, Kraft, Heinz. These are the biggest holdings. Look at the percentage here, and it's interesting to see Apple makes up nearly half the portfolio. And there you go. So you could just simply buy Apple shares, and you would effectively mirror at least 50%, close to 50% of what Berkshire Hathaway is currently doing as of 31 December. Now, of course, there are different holdings nonetheless that we may not necessarily be aware of. So it's a pretty rough estimate here. I wouldn't take that as being, the exact number there, but it's a pretty rough estimate. But nonetheless, it gives us some good insight. And you can see if you scroll down here, there are plenty of companies. All right, so if you get the chance, have a look, and you can scroll through all the different companies. The question then comes down to, well, if I was to try mirror Berkshire Hathaway, would I necessarily want to go buy 30 odd companies? Why not just simply buy the ticker code? Well, sure, you could consider doing that. So this is the Buffett Online, and here's the CNBC one here. So if I scroll in along here, I can certainly go and have a look at all the different holdings there again. Okay, so there's two different ways. I like this one the most, but that's just me. The Buffett Online just makes it, I like the layout, just nice and easy to see. Okay, with that said, let's jump back into our slides. All right, so there's two different ones you can go and have a look at for different snapshots. And this should say 2021, beg your pardon. Largest known holdings as of was actually November 2021. Okay, so per that link over there. So this is November 2021. You can see here, so Apple, $130 billion, Bank of America, 44, American Express, 27 billion, and Coca-Cola, 21.6 billion. And I just simply went to Google and I typed in, Berkshire Hathaway largest holdings. This was the latest snapshot I could get per Google. Again, it just comes down to just doing a bit of detective work online. Right, so what I did is I used VectorVest, hopped into VectorVest, and I built a watch list. Now, if you've never used VectorVest or don't know what VectorVest is about, VectorVest is a brilliant set of tools where you can build, stress test, and manage your very own portfolios. We're not brokers, we're not fund managers, we give you the tools so you can do it. And so we do fundamental and technical analysis along with the all-important market timing each and every day. So we make your investing much easier for you to make better decisions. And what I've done in VectorVest is I went and I built a watch list, all right, so of the latest known holdings. So let's do this. If I hop into VectorVest, here we are, and I'll click on this one here, Warren Buffett stocks. So in VectorVest, you've got this amazing tool called Watch List Viewer. It's nice and easy to use. You build your watch lists and you can save them. So I'll just auto fit this, nice and easy. It's pretty easy to use. All right, so don't worry about all these additional columns for now. There's some amazing things you can do. But what I did is I went in and I plugged in all the different codes. All right, so I've got lots of different codes here, 40 odd codes. And if I come down to the bottom here, and I view the watch list average graph. All right, so I can see over here, and I'm going to pull it back a tad. I'm just going to show you a couple of interesting things to begin with. All right, so first up, here are all the Warren Buffett stocks. I'll pull it back just a tad, maybe not too much because it might make it a bit tricky to see. Well, I'll bring it back to 10 years. Here we go. So it's nice and easy and clean to see. So the first one I've put on here is EPS, earnings per share. This is a 12-month leading forecast on earnings. So it's proprietary to VectorVest. It's looking at the future. What are the future forecasts of those earnings on the companies? And it's no secret to those who are subscribers to VectorVest, you've heard this many a time before, rising earnings, rising share prices on average. So over the years, we've seen a very, very strong correlation between rising earnings and a rising share price. Now in this case, rising earnings, rising portfolio, because it's a representation of all those 40 odd stocks. Okay, so here they all are. Now, that was one of the requirements. So Buffett's looking, for companies that are growing their earnings, the return on equity, which effectively, earnings is a key derivative of that. Here's some additional ones. It goes without saying, sales. So in here, let's just make the style and make it jump out just a tad more for you. Here are the sales. So if I take this one off, why not pick on companies that are growing their sales? They're doing more and more business. I mean, would you like a portfolio that on average is having declining sales or growing their sales? All right, of course, you want those companies that are growing their sales. And then you've got your net profit margin. I'll just change my layout here. I've got a Buffett stock layout, so this will make it a little bit neater for us. Here we are. Makes it jump out a tad more. All right, so there's earnings. Here are the sales. I want to see good sales. And then what I'm going to do is I'm going to put on this powerful indicator here called net profit margin. So for you accountants and finance experts out there, you'll know what that means. For those of you that are new to investing or haven't really come across this before, net profit margin is basically just a fancy way of saying after every $1 of sale that you make, what are you keeping as profit? So for every $1 of sale across these companies, these Warren Buffett companies, stocks, we're keeping about 22 cents on the dollar after all expenses and tax and whatever have you. All right, that's just, roughly that's what it is on average per those stocks that we are aware of. So if you are a Warren Buffett type investor, you want to make sure that, that you're growing your sales, because by growing your sales and holding your net profit margin steady, if not growing it, then guess what? That's going to lead to a good set of earnings, and we know that rising earnings drive share prices higher. Okay, so These are the key things. So to be a Warren Buffett type investor, these things become important, right? Good net profit margins, good growing sales, good earnings. Warren Buffett is not so interested in dividends as such. A lot of the reading we've done on his books and that, it's a good byproduct to get dividends, but it's certainly not the be all and end all. So you can see over the years, again, you'll see there's a strong correlation between a rising set of earnings and companies being prepared to pay more and more in dividends. So you can see here that these companies were paying on average $1 a share. Now it's up over $1.50 per share for their dividends. Because if a company's making more money, then they're more likely, they're in a better position, of course, to share some of those gains with you, not just via the share price, but also via some dividends. All right. So these are things we are looking for based on what Warren is telling us, because effectively by taking all his current holdings and running it through VectorVest, we're able to see a lot of what's taking place. Let's go to his top 5. Right, so we knew what the top 5 were: Express, American Express, Bank of America, Apple, Coca-Cola, and Kraft Heinz company there. So here they all are. Let's do the same deal. Right click down the bottom here, view watch list average graph in VectorVest. Surprise, surprise. Look at those earnings. Right, those are the top 5. Net profit margin sitting very well at 25%. I'll just make that jump out a tad so we can see it a bit easier. All right, so there we are. 25 cents on the dollar for net profit margin. And what are sales doing? Yep, I'll just make that jump out for us too. Sales are growing. So there's a good reason why those top 5 are in there. And you can see that they had a little bit of a sort of a pullback on the net profit margin, but don't be fooled. That net profit margin's still been well over 20%. So it's a very good net profit margin to have. A lot of companies would love to have a net profit margin as strong as that. So you can see the net profit margin, although across those 5 have been coming down a bit, it's been more than offset by the rise in sales, which in turn, is driven by those earnings. So if your sales are increasing faster than what your net profit margin's sliding by, it'll make up for it on the earnings, because you're selling more at a lower margin, but because you're selling a lot more, it more than makes up for the earnings. So at the moment, net profit margin is sort of just creaking a bit, but 25 cents in the dollar, it's still phenomenal net profit margin rate. So let's see, if I go back 17 odd years, you can see it's been pretty consistent around about that 20 to 25% on the net profit margin. Look at those sales, look at those earnings, look at the average of all those shares taking place. So that's what he's doing. All right, so if I close out of here and I say to myself, okay, well, that was interesting. What if I could do this? Now, remember last week I presented finding the hottest stocks from around the world. Now, I'm in the US market here, and we did this for Australia, we did it for Europe, Canada, UK, for example. And you remember we picked out some hot stocks. And what I did is I went back, I revisited the list from last week, and I plugged in an additional stock, Zim Integrated, because it had a great set of earnings and sales picking up. Here we are. If I right click down the bottom of this list, just these handful of stocks. All right. Is this the Buffett methodology? I'd say it appears to be so, at least from a mechanical perspective. Net profit margin coming up at about 20%. Not as good as Buffett's at 25 odd, but nonetheless, it's up at 20 and growing. Sales are growing, and the earnings are driving higher. So I'd say that this is similar to a Buffett methodology, but are these companies unique and special? All right. And I bet you if I had to speak to the great Warren Buffett, he might look at a few of these and say, no. So again, I can show you the mechanics of finding it. You just got to make sure that they are unique and special companies and have their competitive advantages. All right. So let's jump back in to our slide set here. All right, so just to show you, here's all Buffett stocks. Sales are rising, as we saw, net profit margin rising. What I've done here, and there's a lot of numbers here, and I'm going to drill into it. I started to back test the stocks that we knew of by the end of last year from Warren Buffett. So VectorVest has this amazing tool where you can do some stress testing in the system. Okay. And if I load up over here, we've got this tool in VectorVest called BackTesting. Now again, don't get bogged down by everything that this tool can do. If you're new, then you can take your time and slowly learn how to use it. Once you've learned how to use it, it's not hard to use. Once you've had a bit of practice running through a few tests, it's an incredibly powerful tool. So let's start off. I'll show you a couple of different derivations. So if I did this, if I took a 5-share portfolio, so I'm going to say to myself, you know what? Let's just say I take a 5-share portfolio instead of holding 40-odd stocks. You know, could I replicate something similar to what Warren Buffett has achieved? Well, let's have a look. What I'll do here is I'll go back into my Viewers tab here, and here's Warren Buffett stocks. And let's just do this. Let's right-click again down the bottom, and let's have a look at it over the last 10 odd years, 10 or 12 odd years. So if I bring it back, there we are, to about 212. So you can see that the average of those stocks were just shy of 50 odd dollars, and it's grown to 225. So you can see it's gone up about 5-fold, right? So about 500% returns during that time period. What I did in VectorVest is I said, okay, well, if I hop along to backtest, I don't want to hold 40-odd stocks. It gets quite difficult to potentially manage all those stocks. What if I could just start with a small sum of money, just 5 positions, $5,000 starting point, so $1,000 in each position for the top 5 positions, and I was to run a backtest. Now, how would I derive the top 5 positions? So what we do at VectorVest is we'd rank and sort all of those Warren Buffett stocks by the best fundamentals and technicals. So what we do here at VectorVest is we've got this master indicator called VST. And it finds you the best combination of fundamentals and technicals. So if I look at the list here, all right, VectorVest is having a look as of current date. It's saying Bank of America, American Express, Bank of America, Abbey View, Chevron, and Apple are your top ranked VST, so value, safety, and timing stocks. And at the bottom of the list down here, the ones that are struggling a bit more, ticker code TEVA, RPRX, and STNE. Let's graph the bottom 3. So I'll quickly fire up the bottom 3 here, have a look. Okay, using the same metrics. Look at this, earnings just starting to roll over a bit, sales coming off a bit, net profit margin nonetheless still holding steady at about 17%. Next one here, you can see the earnings you can see over here, just starting to slide away. And the sales are flatlined along with the net profit margin. But look at that net profit margin, very, very attractive net profit margin. And over here, wow, look, this one, Stone Co. Who knows whether Mr. Buffett has sold out on this? He may very well have. We'll have to wait until the next announcement to work out what he's currently holding. But right now, you know, if I'm looking at this, I'm saying, well, hang on, net profit margin sliding. Sales are coming up, which is good, but earnings are sliding quite heavily too. All right, so if I look at the top 3, so VectorVest takes it, ranks it by fundamental and technicals. It's grabs, so the top 3. You'll see quite a different picture, right? So you're seeing sales coming up, earnings going up, net profit margin tracking up. All right, look at this one here, beautiful set of earnings. Sales just ticking up again. Whoa, look at that net profit margin, just going higher and higher. This one here, Abbey View, just having a little bit of a breathe on net profit margin, but look at that, 40-odd%. Sales are coming up, earnings sliding a bit, which is not what I'd want to see, but nonetheless, still pretty strong when you consider those net profit margins. All right, so closing out of here. So what we do in VectorVest per our backtest is we would take those top ranked ones at any point in time and hold on to them. Where they are stopped out based on risk and money management rules, we would sell out and we would buy back in when the market dictated to get back in. So we use market timing, we use fundamental and technical analysis. And again, if anyone wants to know all these settings, take it a trial, reach out to me, reach out to the VectorVest team. I'll pass all these settings to you. All right, but this is the back testing that has been done on this. So you can see here that back in 2012, the 5,000 back tested has gone up to 25,000. So here we were able to get the 500% returns, but do it with a much smaller position. All right, one can argue, so well, doesn't matter, I'll just go and buy $300 or $5,000 worth of Berkshire Hathaway stocks. Sure, you could do it that way too, but this opens up a gateway here for you to test a lot of different types of strategies. All right, so there was one with a 5 position. I did one with a $100,000 position using those Berkshire Hathaway stocks, and so 100 here has turned into just over 500. So some very impressive returns. Here's one, it started in 210, 5 positions. This one had a very wide ranging stop loss. This used about a 40% trailing stop loss here, and you can see here we were able to turn the 100,000 into 700,000. So, you know, the different derivations of back testing, just to, you know, we're picking on those top quality stocks and then we're running them through testing scenarios to see which ones could stack up. All right, so here's another one here. This was a 10 position one. Okay, so I'm just demonstrating the power of what VectorVest does. Certainly, I cannot replicate what Warren Buffett does in any way, shape, or form, but it can give you that great insight into what is taking place. Here's one that I started with $10 million just to make sure that it could handle large liquidity. No doubt, as Warren Buffett's got billions of dollars invested in, sure as day, it could handle it no problem. All right, so there was one with a 10 million start, and here's one going back to 1996 with $100,000 starting point, and there we are. It's 100,000's turned into about 1.4, 1.5. All right, so if you want the settings, I'm most happy to share them with you. I'm just mindful of the fact that there's a lot of new people watching this presentation, and the first time you see Backtester, I'm just mindful of the fact that I just don't want to sort of overload you with information overload. It's very easy once you get to use it, but the first time you see it, you go, hang on, what was all that about again? The best way to find out, take it a trial. I'll share with you all the templates per our Warren Buffett stock backtesting. There's just some phenomenal work that's been done on there to show you some pretty exciting returns. So you can see here, if you run your eye down the annualized returns, you know, 40, 43, 37, 53, 31, 58. All right, compounded rate of returns, very, very impressive returns here too. Some of these portfolios have had a bit of drawdown. That means that the most it's lost from a peak to trough cycle. So you'll typically see Warren Buffett's portfolios, he doesn't panic when the market falls. In fact, he uses it as an opportunity to buy more good quality long-term holding type stocks. So as a result, you will see some drawdown in his portfolios. One of the back tests we did on the 5 position, 210, 100,000 start, we were able to keep the drawdown very low at 20-odd%. All right, so if I hop back into VectorVest here, you can see it was this one here. So this was just a simple 5 position portfolio. So no more than 5 at any point in time. And you can see it's tracked along. So let's say you like this one. So you did some testing, you liked it. You can then track it in the Portfolios tab. So what I did here in the Portfolios tab is I put in a couple of different derivations. So let's just say this was the one I liked, or this was the one I liked, or whichever one that you wanted. I think this was the one. Here we are. So now what I can do each and every day is I log into VectorVest, and it tells me exactly what's taking place, and I can choose if I want to follow it or not. So right now, if I was following this portfolio, I could say, okay, BMY, SPY, and UPS. That's it. That's all I have to worry about. This portfolio here, on average, does about 6 trades a year. So if you like to be involved with Warren Buffett type methodology, and you don't just simply want to buy and hold Berkshire Hathaway stocks, this is another such way that you could consider being a bit more hands-on to look at the different components going in. This by no means is a mirror reflection of what Warren is doing, however. All right, all we're doing is we're just taking what we know at any point in time and then using our backtesting based on Warren Buffett type stocks. It's not necessarily his methodology, it's just simply using his known stocks, at least the last known point in time, and then using our risk and money management rules around it. So I'd have to say that something like this has produced some pretty spectacular results. and a bit of fun to track and watch how it goes along. The reason why we're showing you this type of methodology is because once you get into back testing, you can do other things, and you can say, okay, well, you know, maybe I don't like Warren Buffett stocks. I prefer this 5G revolution that's taking place at the moment, and I'll build myself a back test on 5G type stocks, and then once I'm happy, I'll track and start to monitor those stocks. Here's the 5G taking place. So it's your entry point from which you can then go and derive a whole lot of different types of portfolios. Here's a worry-free type portfolio, big blue chip type stocks being tracked every day, and they're booming away. It's nearly up at nearly 1,000% return since 1997. So it's the gateway from which you begin to work on other strategies. All right. The talk today is for Warren Buffett stocks, and there's nothing wrong with this strategy. It's probably one of my all-time favorites at the moment. It's certainly done some amazing returns, but it's your gateway to tracking other types of portfolios. Here's Buffett stocks using 10 positions with a $100,000 starting point in 212, and here it is. That's how it is tracked along. So just to show you behind the scenes, and again, if you're new, take it a trial, you'll find out exactly how to do it. Right, so we're working out when do we buy in, right? What are we going to buy? So we created this Warren Buffett search. This stop criteria, we're using a trading stop here, 40%. Why? Because it works on the back testing. 10 positions, here are all different rule sets in play. All right, it's all there per the back testing. Okay, those are results that it produces, and then if you choose, you can follow it accordingly. All right, so some pretty spectacular stuff there. All right, so I've just put some screenshots in there, just the different returns that have taken place, and here we are. These are Buffett stocks, type stocks, certainly at least what we knew of towards the end of last year. Okay, so this one here, this 212 one here that does that listed Buffett's here. I was tracking 31 positions, and you can see this is so Warren Buffett stocks is a 212 based on 31 of his positions, so it produced some very good results. Here we are, it's a 100k start using the 5 stocks. This is the one I showed you today. So it turned 100,000 into over 500,000. All right, and this does just 6 trades a year. All right, so it's not a high work rate based on some of the back testing. All right, did you like what you saw today? If you like what you saw today and you want to take it to the next level and you really want to get your skill set up, why not consider some of these types of strategies? Warren Buffett type strategy is a brilliant strategy. You know, look at the 5G stocks. We've done testing with medical stocks. We've done testing with gold stocks. We've done testing with the new craze, which is green stocks. A lot of fund managers now are being pressured, rightfully so, by a lot of their clients to say, look, you know, let's invest more heavily into the green technology. We can't just keep producing huge amounts of CO2 indefinitely. Whether one believes in whether CO2 causes damage or not, I think things are moving forward that there are cleaner ways to produce energy, and so all that craze is taking place out there. We've done a lot of back testing on that. Go and have a look at some of our tests and see what you think of it. For our existing subscribers and for those that do become trialists, when you load up Australia, so when you first sign up to VectorVest, you'll be given a link where you install the software, and then when you very first log in for the first time, right, so you'll load up the VectorVest software. It works on Apple, Mac. We work on a PC. We work on your tablet as well. We've got an Android and an Apple app as well. When you log in for the first time, or every time, you'll be greeted by the different flags. So here today I've been using the US flag, right? Put my username, password, log in. I'm checking out Warren Buffett type stocks in the US. If you want to go and have a look at Australia, you click on the Australia flag, put your username, password in, log in, and away you go. The reason why I'm bringing this up is because if you log in to VectorVest Australia and you go to this tab here called Views, click on Views and you load up the weekly essay, right, on the 26th of November 2021, there's a big write-up on Warren Buffett stocks. Here it all was. And if you get a chance, go and have a look at it, because a lot of what I've covered today is in there. And then there's a video, a really useful video that's in there as well, demonstrating a lot of the back testing. And then I've given you a whole lot of additional links, just some fascinating stuff. Like I found a letter back in, what was it, 2004. And here Mr. Buffett was talking about his returns relative to the S&P 500. So you can see here, I probably need to zoom out a tad, but 1965, all right, so Berkshire Hathaway did 23% and the S&P 500 did 10%. All right, and the next year, 1966, he did 20%, and the S&P lost 11%, etc., etc. Now let's look at more recent times. So this is a bit out of date, but still back in 2004, 10.5 versus 10.9, so he just slightly underperformed, and in 2.3 slightly underperformed. Here you way outperformed 10% to 2002 versus negative 22. So you can go back over time and just see some of these returns, and then read up about some of his methodology and the way he does things. I found it quite fascinating. Where was it as well? There was another one here. There's a video on Coca-Cola, why he bought into Coca-Cola. All right, so there's plenty of useful links. You can see there's a video, 3 links plus a video of 4. And there's a bit more on there as well, how to track your stocks each and every day. So this was a real action-packed essay, and we write these essays each and every week for all of our markets, Europe, UK, Canada, for example there. So you can click on Essay Viewer in each and every week. You can go in and read up about what's taking place. So recently in Australia, we wrote about silver, we wrote about our dividend aristocrats, we spoke about what the market will most likely do this year. We spoke about rare earth stocks, those green type stocks. We spoke again, there we are, that's the Warren Buffett write-up. Okay, back testing the green stocks, so the big theme there, green stocks at the moment, some amazing results. All right, so plenty of stuff, and you can look at it over the years. There's just tons and tons of excellent stuff there for you. All right, so I'll leave it there. If you'd like to take it a trial, the best place to go to, let's see if I got the link in here. Well, you can call our support team, 1-800-303-782. That's Australia toll free. All right. The other, to take out a trial, the other place is if you go to our homepage, www.VectorVest, I'll just bring this across, VectorVest.com. So if I go to VectorVest.com, there we are, and risk-free trial. So you can click on there to take out a risk-free trial. This is our homepage here. All right, the other thing is, don't forget, I'll just close it out. The other thing, don't forget, the next live event for Australia, we've got another talk coming up, same time, same place, but it'll be for next week. All right, same time, same place next week. Is nickel the new gold? That's what the talk will be. All right, so is nickel the new gold? So if you hop along to our homepage, or if you go to our YouTube channel in VectorVest, so go to YouTube, type in VectorVest Australia. You can't miss us. You'll see the next one coming up, is nickel the new gold? For those of you that missed the last talk, finding the hottest stocks from around the world, don't miss out. The replay's on there. So I'll just bring this up for you now. Give me a sec. I'll just bring it across. Here we are. Here we go. So YouTube, VectorVest Australia. So if I click on VectorVest Australia, I'll just zoom it out a tad. So here we are. This is Warren Buffett. We're still live. But if you click on videos, you'll see it. There we are. Finding the best stocks from around the world. So you can certainly go and watch that one. It's a great one there. And you can see a lot of different ones there. All right. So I'll wrap it up there. Thanks again for coming along. I hope you got a lot out of it. I know a lot of people are going to watch the recording. So that's good too. Don't worry if you weren't able to attend live. That's why we do the recordings there. Let's transition across to here, and I'll sign off here. Thanks again. Hope you got a lot out of it. I'll see you same time, same place.